The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 20th inauguration fabulous Friday edition of the Trader's Edge. I'm your Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstances of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044 is the number you call. Of course, you can send me an email, steve@tfnn.com, and inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow trading up 58 points, about 0.3%, trading out at 19,791. S&P is up 4 points, about 0.2%. NDX is up 8 points. NASDAQ Composite up 9. Russell 2000 up 4. Semiconductors are leading the charge upside, up 1 0.3%. Trade up $12 at 9.30. To the upside, you've got gold up $3, silver's up 2 pennies. Light sweet crude is up $1, trading out at 53 and change out there. Also to the upside, individual stock-wise, you have Skyworks Solutions up nearly $10 or 13%. Tucows, Tucows, you pronounce it for me. It's up 16%, up about $6 out there. Broadcom up $5. Preferred Bank Los Angeles, BK of Los Angeles, that's up 8.5%. Buffalo Wild Wings up 4%. To the downside, it's Transdigm Group, down $24. That's nearly 10%, 6 million shares. To the downside, Bristol Myers Squibb. You try saying that after lunch. Down $6, 11% to the downside. Intercept Pharmaceuticals off about $5. Priceline down 4, which is basically nothing. Chipotle is off $3. So we've got plenty that we can look at. I want to look at what you want to look at. We do have some requests that have come in. Let's take a look at the first one. Then we'll go to the markets, and we'll take a look at the second one. The first one that came in is asking if we could take a look at Alaska Air. So this is for Jim, who's working and listens to all of the archive shows. So thanks, Jim, for doing that, and isn't able to call in. But he was able to go ahead and send his request on in early. And what Jim is looking to do is get into Alaska Air. And no wonder, this thing is a little rocket ship out here. ALK, by the way, is a ticker symbol if I didn't give that to you. Now, Jim, we're going to start off with the monthly chart out here. And here is what we know. There's a swing point, nice little shooting star. That was a natural resistance zone. That was a signal that price wanted to move lower out there. And, in fact, it did. That was, by the way, in the month of December 2015. Moves lower, makes a low out here in June of 2016 and begins to motor on higher. Was able to take out that resistance level. That's the top of that monthly session, 87.17. There were 25 million shares that traded during the month of December 2015. Last month, you saw a close above that with 27 million shares. That says a swing point, a B point of a lightning bolt, A to B equals CD, was taken out with volume. That gives you what we'll call a confirmed price target. The question becomes, where do we really start the A point of in a stock like this that has just simply continued to motor on to the upside? In fact, the real first correction came after that shooting star in that $87 area. What I would do is just take the conservative approach on this monthly chart. Doesn't mean that the conservative approach is what price is actually going to do, but if we take a look at the conservative approach here, where price is headed to from a monthly perspective, the minimum would be 100.99, so about $6 more to the upside. That's just the first target. Doesn't mean that that's where price is going to stop. It can easily make a 1.272 expansion. It could be one of those 40%ers that decides. In fact, as I look at this chart here on a monthly basis, this is more than a candidate that is going to do more than the 1-to-1 A to B equals CD to the upside, $113. With regard to where to get in on this thing, up at these highs, you've got to certainly play this as a momentum move. What would I suggest you do on this? I would suggest, if we go take a look at the daily chart, my suggestion here is to wait for the market to complete its bottom, which at this stage we don't believe is in. We'll go back and take a look at that just to see if maybe this will find a little bit of selling pressure and pull back. If we pull up some market profiles, and that's what we'll go ahead and cover next, but if we put up some market profiles out here, there is no resistance on this thing. Right? You take out a B point of a monthly swing point with volume. I'm assuming it's done on a weekly, daily basis as well. You're above all market profiles. That could have at least been a resistance zone. So there, where could this pull back to? Hey, look, a lovely buy on this would probably be $86.85 and do it with less than, 1.2 million shares, 2 million shares, something like that. Will it get back there? I don't know. It first has to get inside 91.89. If it doesn't do that, you can just continue to inch higher out there. Price has been moving higher. I'll pull up a weekly chart for you. Price has been moving higher with less relative energy. You can see a little diagonal line on my screen. But is that a bearish signal? No, it's a so-called warning-ish type signal. But we're a long way. It's a long way from giving you the actual bearish signal out here. And it doesn't mean that this pattern won't be resolved. 87.23 on this chart here, the weekly chart, says that would be a nice buy area. So I would put that one in your coffers out there. That's really the best thing. Now, I mentioned wait till the market makes a bottom. Now, the market that I'm referring to here is the Dow, because not all markets are really doing the same thing as we speak right now. So now that the inauguration party is about to begin and we've had the official handoff, now we can just really get back to just normal charting versus, I don't know, anything else we might have been doing out here. So let's step back for a moment. Now let's take a look at, hey, what's the market doing? What is the likely reason why it's doing it? And where should it go? And if it doesn't go there, what will be our signals? How about if we do that? And all I'm really trying to do is to time maybe Alaska Air with regard to the direction of the market. So here is what you and I know. We know this without equivocation, whatever that means. This is the 1-year annual seasonal cycle pattern out here. And what this says, by the way, this is for the Dow. So this is specifically for the Dow. It's 85 years worth of data. And that says that on average, the Dow over 85 years is set to make a top on January 6th. Has the Dow made a top? Has it made its high as it was screaming up to that 20,000 and missed it by just a few pennies out there? Well, the exact day that occurred was January 6th. Coincidence? I don't think so. This says the market should make a bottom sometime around January 30th. That is what is still in play for the Dow. So we get back from this break, let's take a look at one other thing, well, many other things that we can take a look at to help guide us as to what the market is doing as we speak right now. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets.
The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 75. S&P is up 6. So the annual seasonal cycle, which works really well, you might say, how well does it work? And if we just simply, I should have done this earlier, but we're going to do it right now. If we were just simply to ask that question, go take a look at 2016. We can't really say that enough. Here are the cycles. Here's the annual seasonal cycle with exactly what occurred out here. So whereas January 6th is a typical turn date, in 2016 turned out to be 2015 on December 29th versus January 6th, 2016. Bottom typically comes in around January 3rd. Remember, the key here, both at the highs and at the lows, is we have these target dates, and what we look for are reversal-type patterns. What could those be? They could be Gartley, butterfly type patterns. They could be time to mark sequential counts, time to mark setup counts, time to mark combo counts. They could be a price moving higher or lower with less relative energy out there, followed up by some type of reversal. Those would be the real key patterns out here. It could be a failure at a swing point, a test of a prior swing point with a lighter volume in some type of reversal, getting below Stevie's oscillator on change line. So you want to use those dates as your target time frame, and then you want to take a look at different patterns. Could be a seventh wave move out there. So a good handful of signals to help us identify when those tops or bottoms are forming out here. So the January 30th didn't come in. Instead, it was February 11th out there. As the market moved higher, it actually moved higher into the beginning of May, end of April time frame. But the real bottom that comes in during the favorable seasonal cycle, and that's the favorable seasonal cycle period that we're actually in right now, after the end of January, in this case here, February lows, comes in June. This one took place June 27th versus June 25th. That's Brexit and everything out there, right? Brexit just helped to push it to a lower low. Market moves right up into July 21st. That's really your summertime high. Summertime. And in fact, this year it hit right on the nose. Moves down into October, typically around the 13th in this case here because of the presidential election cycle, November 4th. Moves up. Tops on January 6th. That's where the Dow is at as we speak right now. Is there a bottom that's forming? I don't know, but we can go try to answer that. What other pattern could possibly be out here inside of the market? Well, we did have an inauguration. We did have a change of power. That change of power going from a Democratic presidency to a Republican presidency, supposedly. At least that's the party that is in here. And there's only been 4 times in the last 85 years, 84 years, 85 years, where that's actually occurred, where it's gone from a Democratic candidate to a Republican candidate. Those 4 are here along with the averages. And the interesting thing with regard to each of those being Bush the Jr., being Eisenhower, Nixon, and Reagan, that each of those saw the Dow top on January 6th. So pretty good feeling that the Dow didn't care about that 28,000. It didn't really care about the media, did it? What it cared about was what was the cycle, because the cycle is way more important than the media buzz that's out there. Now, we've got a January 30th target out here. I don't know if these patterns, it's only 4 data points, which, our favorite polar bear would say, hey, 4 data points? You can't give me some type of causation thing out there, which is what he's supposed to do. Look, I'm just going to use the patterns that are out here. You can throw them in the drain. You can flush them down the toilet. It is okay with me to do that. But if we just simply go with this data out here, and we're taking a look at the orange line, that's the top line, golden line out here, that happens to be represent the Reagan presidency. January 6th, the bottom that actually formed in his first year of office came in February. So February 3rd. That was February 3rd. There was a retest of it February 17th, sort of a retest February 23rd. And then boom, it was off to the races. Off to the races until when? Off to the races until basically May, the end of April out there. Just kind of the normal seasonal pattern kicking in. The red line out here happens to be Eisenhower. And in Eisenhower's case, the bottom came in right around February 20th. First one right on February 12th, moved higher. This time here, it was really just a move higher for a couple of weeks out there into March. If we go take a look at, let's see what line, the green line out here, we take a look at Tricky Dick, and we take a look at Mr. Nixon. The actual bottom came in on January 8th. So it was like a top on the 6th. Boom, the market didn't really care. It went ahead and took off on January the 8th out here. At this stage, the market is not following along that pattern, so we won't pay as much attention to it. And in fact, the blue line, which would be Junior out here, George Jr., that bottom came in right around January the 14th. The actual high before the market started moving lower was back in the March timeframe. So it's possible. It's very possible that the market, the Dow specifically, could be following along this path. We'll know that. How will we know that, or the potential of these paths here? We'll know that weeks from now, maybe a month from now. That'd be at least 4 weeks from now or longer before we'll know whether these kick in. But we'll have that as a frame of reference to be able to go back to. Instead, I'm going to go with the cycle that is the more dominant cycle. It works until it doesn't work. And at this stage here, it's working. So there's no reason for us to ignore it, right? Now, with regard to the Dow, is the Dow in the process of trying to form a bottom? Yeah. And is there going to be a huge sell-up? I don't think so. You might say, for goodness sake, Steve-O, how the Sam heck, or some other adjective that you might use out there, how the heck can you say that? Well, if I take a look and I come here to the Dow today has its advanced decline oscillator. That's this bottom panel here, back above zero. It's been below zero since December 28th. Now, below zero tells us, communicates to us, conveys a message to us that sellers are in control. When it is above the zero line, that's a little green line on the bottom here, conveys the message that buyers are in control. Well, as we speak right now, buyers are supposedly in control. They're certainly trying to take control. Now, here's the deal. It's 1:24 in the afternoon. Quite frankly, this reading doesn't mean a hill of beans until we get to 4 o'clock in the afternoon. But if at 4 o'clock we see that reading above there, market is trying to form a bottom. It was communicated to us 2 days ago when the Dow formed a little hammer candle on January 18th. Now, there was a close slightly below that yesterday. But nonetheless, we know that the swing point being December 30th, has been under attack with lighter volume. We'll go take a look at today at some. No, yes, it was simply light volume out there. It's not even under attack as we speak today. So not much of a sell-off when we take a look at that. There's another message out here with regard to the Dow. And you and I have taken a look at this over the last couple of weeks or so. And that is taking a look at the individual holdings and stocks with inside of the Dow. And Maria, who called yesterday from Erie, Pennsylvania, Procter & Gamble came out with numbers and it just gapped up. And it has some pretty good volume behind that move. 15 million shares taken on a swing point. That only had 12 million shares. We were looking for maybe this to pull back into 83.24. It's forming potentially a Gartley sell pattern out here, but at this stage, because she was even looking at a long term, don't be chasing it. Had good earnings. Let's see how this thing behaves over time. But back to the right-hand side of the chart out here, what you're going to look at is this line here, this little column. It's not even a line. It's a line and a column, but really the column out here that shows the difference, the price oscillator, whether it's above zero or below zero. In this case here, you're just using the MACD tool. I'm using the MACD tool in order to identify that. The total number of issues that are below zero, 1, 2, 3, 4, 5. A little different zero line than we looked at, but still zero nonetheless. Only 5 of 25 issues. That says 83% of the issues inside of the Dow have a price oscillator above zero. Folks, just simply bullish. Yeah, I know, but it's got to make a top from somewhere out here. December 28th, that price oscillator has been below zero, or not the advanced decline reading out there. This is not a real bearish sign. Just a retracement that's going on. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're taking a look at the Dow here. We know that it formed a top on schedule as it was supposed to. Really, we've seen very little pullback. It's been a week. It's been one of the weak indices out of the weakest. Arguably, maybe it's been the IWM. But at this stage here, the data points, the piece of information that I have that are important for us to gauge what the market is doing out here with that advanced decline oscillator reading below zero. Should be weak, should have had no problem, okay, with sellers in control. The Dow should have had no problem in really pushing lower, and it has not been able to do that. So then logically, this is Steve-O thinking logically, you might listen to me and say, there ain't no logic in that. That's fine. But if I take a look at, the number of issues again here, it's more than just saying, hey, 83% of the issues are trading above its price oscillator line, so that's not bearish, But what I do is I take that data and I look at the bottom, and I just take a look at the 15-day simple moving average. Simple just to keep things simple. You know me as an exponential kind of guy, but in this case here, simple because it actually gives the best results. And when you see crossovers, they can be a nice indication to us of, in this case here, bullish or bearish. Here you'd be looking for a bearish crossover. We've seen two over the past couple of weeks, but they have not held. When this tool works, it doesn't kind of jive back and forth out there. It works, and it shows you the change in trend out there, the underlying change in trend. Doesn't help us to measure the depth of the retracement out there, then we've got to go ahead and use other tools. But it's just not in place as we speak right now. So it is suggesting to me that even between now and January 30th, until we see some other signs, that there is just simply not much of a retracement that is good. Does that mean you shouldn't prepare to go long towards the end of January, early February, whenever those signals come in? The answer, of course, you should prepare for that. So if you believe in the seasonal cycle approach. So until we get some piece of information that tells us otherwise, yeah, that's what you should be looking at doing out here. So that's a piece of information that you should consider. You must consider out there if you're really trying to gauge what's going on inside these markets. Another piece of information, hey, how'd you like that little high pitch there? I don't know where that came from, but another piece of information that is worth paying attention to, well, we've got several, I'm sure. We just take a look at the futures indices out here. And, the NASDAQ is the thing, is the index, which would go ahead and pull us lower or pull us higher. And right now it's pulling us higher. Pulling us higher in a small way. Oh, what the heck is going on there? How'd that happen? The level to watch today is going to be 5052. If the NQ closes above 5052, there is no reason for this to not continue to move higher. Below it then says, okay, you're looking at 5030, maybe 4996. And it takes quite a move down. It's got to be below it's got to at least get below the trend line that has been established out there for it to give us any type of real significant change in trend information. Hey, it's well off its highs today. Just watch the 50-52 area. Above that, it's not a bearish message, that is for sure. Now, the ES mini having difficulty, as it has for many, many trading sessions now, trying to get above its TAS weekly profile. That is a significant level of resistance, 2273 out here. So watch that. Any move above that, then 2277, anything above that, it's off to the races out here. Not saying that's going to happen just yet, because I'm still in the camp that, a continued sideways pullback, maybe slight pullback into January 30th is still the program out here. If I take a look at the New York Stock Exchange as an example, and here is the New York Stock Exchange, there's a couple. Well, first of all, here's something that we know. If we take a look at the New York Stock Exchange, there was an island top, island bottom. The island bottom is the pattern that's in play right now. In fact, it was the key pattern. This was the one that formed back on June 27th, 28th out there. It actually formed with the sessions of June 24th and June 29th. That created that little island. Nothing more bullish than a island bottom pattern, nothing more bearish than an island top, which had also formed back in the early part of September, but that was taken out. That was taken out with conviction in December. Nothing more bullish than a failed bearish pattern. If we do the conservative approach here with regard to A to B equals CD patterns out here, we'll start from the island bottom. We'll go to the island top. We'll do the retracement down into November 4th. And you can see it did complete a one-to-one A to B equals CD. Does that mean you sell the holy heck out of it? No, not necessarily. In fact, it was barely a retracement that took place on that C to D leg. If we take a look at what was that retracement, because I don't know, I said barely, but that's just a visual out here. Let's go actually see what was that retracement that took place. Not even a 0.382 retracement. I mean, we're talking none. When you can't make a 382 retracement on a completed pattern such as this, which did have a go ahead and sell the D point signal, that took place right here on the trading day of December 14th. When you cannot make a 0.38, that is taking a rubber band, and I want you to wrap that rubber band around your finger so that if you held it there too long, you'd have no blood to that part of the finger. And I want you to back it up. Visually, what would be 3.382, 38% of that? Then wrap up about half of it, because it didn't even do half of a 0.382 retracement, and let it go. What do you think happens? Yeah, it takes off like like the rocket ship out here. That's the pattern that is in play as we speak right now for the New York Stock Exchange. There's the topping pattern that's out here has failed to do basically anything. Now, that's just one pattern inside of the New York Stock Exchange. On this chart here, you and I can look at a number of different things. One, we can take a look at the advanced decline line. So we go take a look at it. The advanced decline line. And I see we've got a caller, and I've been going off to the races here, and I apologize for that. Our callers have priority, and I'll just have to remember where I was. So let's go out to John in Philly. John, my apologies. Thanks for calling. Thanks for holding.
Hey, Steve, no apology is necessary. You were leading right into the question I had for you, and that's regarding the NDX, and NASDAQ 100 index. And, of course, you're tracking this advance. We've made higher highs intraday today off that November 4th bottom. Is there anything that's showing up in your work that's suggesting to you that that rally from November 4th is close to at least, to running its course at least on the short term, or no?
In the NDX 100, the way that I would answer that question is the following. Over the past two trading sessions, they have been the lightest volume trading sessions inside the QQQs that we've had, I think, in quite some time. As example, and these are non-holiday trading sessions. January 19th was 12.7 million shares. The day before that was 12.4 million shares. Today you're at 14 already. So you do have some volume picking up to the upside. Picking up out here as we speak. But typically when the Qs make a top, you will see very light volume. And when they make a bottom, they have very heavy volume. Now, there is a confirmed A to B equals CD pattern out here to the upside. I'm looking at a junior A to B equals CD. The problem is it's December 27th. During the holidays out here. And I don't know how to really gauge 16 million shares when I go ahead and compare that to the B point that took it out on January 6th with 24 million shares. It's that one makes it a tough call. Nonetheless, it's over that swing point. The 1-to-1 doesn't complete until 124 out here.
So
the one pattern
higher, basically.
What's that? Yeah. It says higher. The one thing, there's another element that occurred yesterday in the NDX 100 when it moved higher, John, and that is that it went to a seventh wave move out here. And you know how you love those seventh wave moves.
Oh, geez, look at that.
Can you hold on through the break here? We'll come back and finish it up.
Thanks so much.
Okay.
Appreciate it.
All right, we'll be back with John in Philly, and we'll go ahead and rip apart the NDX 100. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So we're on the line with Johnny in Philly, and we're trying to rip apart the NDX 100. The chart of the QQQ series ETF is on my screen right now. And what we identified, because the question is there anything that would signal to us that a top is in place or forming? And we say one thing that's in place is 2 very light volume trading sessions, which typically take place inside the, which you'll typically see inside the Qs when it's forming a top. I've got one A to B equals CD. It's a small A to B equals CD. Says 124.44 could be a target. 126 could be the target as well. I'll switch to the NDX 100 right now. This is where I was sharing with John that what occurred yesterday off of the, in essence, that B point of the A to B equals CD pattern, the December 2nd area, is yesterday the NDX began its 7th wave move, letter G on my screen out here. As John pointed out, we made a higher high today, so it moves over and can extend itself, you know, until it doesn't make a higher high. It's either letter G or 7, or it's number 3, letter C that you have out here. You know, for me, John, you know, it becomes like a risk-reward scenario out here for you to go ahead and take that short without a confirmation of that 7th wave move. To me, the confirmation today, if you were to see it close below the oscillator unchanged line value, which right now is 5052.74, right, then that would at least say that the price oscillator is turned down. When it's still turned up and rising above zero, it's a very bullish message. It's certainly not a bearish message. That doesn't mean that where you're trying to sell the top or something, you know, might be worth the reward to risk. It does have a couple of patterns that are out there. Right now, on the NDX 100 and the little bit larger A to B equals CD pattern says it's really on its way to the 51.25 level. You know, I haven't ripped apart. So I'll ask you this question because I know how thorough you are. Have you taken a look at maybe just the top 10 holdings, which represent, God knows, I don't know, 50, 60, some huge percentage of the NDX, right? Have you looked at anything?
Names are 65%. That's all you have to look at, exactly.
Yeah. So are you yourself, you know, have you done some work to see what they're communicating to you? Is there anything that you see there?
Well, cumulatively, those top 10 are cumulatively strong. That's the NDX 100 for you. Yes, a couple are rallying towards lower highs. You know, you take Facebook, Amazon, even
Okay.
Google underneath their highs. And, of course, you do have earnings upcoming, and all those top 10 NASDAQ 100 names, have had histories of sizable moves right upon fourth quarter earnings release, and I think that comes up in the queue starting late next week. So that could be either higher or lower, of course. So the one thing I do just notate, as you do, Steve, is the index 100 is in a bull phase. There's no sign of a top. And I'm just looking like you to answer that question. Are there any prices that we're reaching here which would be candidates for the completion of the rally phase that began back on November 4th? So we'll just keep watching and working it.
Yeah, the last piece of information I can share with you with regard to the NDX 100, the Qs out here, is this chart, where typically when there's a top of significance versus just a retracement, as you're pointing out, the Qs are moving higher. The top 10, they represent 65%. Yeah, they're also kind of moving higher, maybe not making newer highs out here, but still moving higher with some good patterns out there. But I like to take a look at what's the equal weight. So if we just took a look at all 108 or 9 issues that represent the Qs these days, and each one is treated equally, are they making higher highs just as the Qs are? And the answer to that is they are. So if I take a look at even the reading right now today, let's just confirm that it's at 48.27 inside of QQEW. The most recent high was at 48.18. That was back on January 13th. So just a few trade last Friday, as a matter of fact, right? So
right.
The equal weighted ETF has gone on to make a higher high. I'm not looking at volume or anything here, but typically you'll see when the Qs form a significant top, the equal weighted will not make a higher high when the Qs themselves go on to make the higher high. So we don't even have that pattern in play. But nonetheless, I will never ignore a seventh wave move, and I won't ignore that oscillator unchanged line. So if we get it close below that, then there is your signal, I would say.
Yeah, excellent. Well, lots to look forward to, especially with earnings coming out for Apple, Google, Microsoft, Amazon, Facebook here in the next 2.5 weeks. So
absolutely,
we'll get some action for sure. Thanks so much, Steve.
You bet. Good to talk to you. That was John in Philly. And let's just use that conversation, folks, as a lead-in because we're looking at the equal-weighted ETF. We're taking a look at some volume perspectives. And I was talking about the NYSE earlier, so let me try to segue into make those two conversations cohesive if I can. So let me switch over to a different set of worksheets out here. And this is as of yesterday's data because I don't have today's data. When I take a look at the volume summation index for the New York Stock Exchange. And as we take, that's the bottom panel of this chart out here. And when and this is where, when volume kind of looks bleak around some of the ETFs and things of that sort that we're taking a look at, or individuals, in this case here, really the indices out here. And I'd mentioned the advanced decline line, which I'll get back to, which, by the way, is looking just fine. There's no bearish pattern inside the advanced decline data. But that's not the only advanced decline information we want. We want to understand what advancing versus declining volume is doing. Are we reaching new highs as the New York Stock Exchange is reaching new highs? So the high that came in inside the New York Stock Exchange took place on January 5th, which, by the way, on that exact same session, the volume summation index, okay, that oscillation between advancing and declining volume, went on to make new all-time highs. That is not a pattern that is associated with any kind of significant market top. Significant. Doesn't mean that we can't retrace but it's not a significant market top out there. Now, New York Stock Exchange has not gone on to take out that high, but volume has still really remained pretty good. But it's a pattern that should exist if you're looking for some type of major market top. Let me give you an example. Remember, in 2015 was when we saw the New York Stock Exchange make a significant top out here. In fact, it wasn't August, it was May. I take that back. We think of August, but it was actually May 21st, 2015. So just to give you a frame of reference with regard to why I'm communicating to you what I am. Take a look. The New York Stock Exchange between April 16th and then May 21st went on to make a higher high. That's That's that little diagonal line, blue diagonal line. But the volume summation index was not doing the same, albeit just slightly. It was not doing the same. It was confirming that top. Of what consequence, you don't know. But when you see that type of divergence out there, it's also just like not ignoring a seventh wave move. You don't ignore this one. We don't have that with regard to, something called a broad indice out here at New York Stock Exchange that you would typically see at significant tops. Another time prior to that takes you back into September 2014. Here you are making what we'll call a double top. You don't really know it's a double top till you take out the swing point, the prior swing point, which was in August. We know it was a test of a prior swing point. Yet, if we take a look at the advancing decline volume summation data out here, it was making a lower high. Those are the types of patterns. Look, I go back to March of 2009. We'll be right back when we come back from this break.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So we were taking a look at the New York Stock Exchange, just ripping that apart, somehow segued into it. We were taking a look at, in this case here, advanced decline volume data. And look, it's not going to call every single top and bottom. It's going to call basically every single major top and bottom out here. Here is the March 2009 level, which went on to see lower lows inside the New York Stock Exchange. But look at that volume summation out there. I mean, significant. The red line on here being that Stevie's oscillator unchanged line. out here. And then if you go back to we'll stop here. If you go back to the 2007 tops out here, these patterns were all over the place. So you fast forward to where we're at now. Do we have those patterns in play? And the answer is we don't. So any top that forms out here, any pullback that takes us into the end of January, or whatever it is. Look, I wish I could always give you the exact day, and I do the best I can for subscribers when those patterns show up, so they certainly know about it and what the market is doing. And I wish I could control the market, but I can't. But what I can control is knowing these different patterns that exist at significant market tops and bottoms out there, and to understand what that seasonal cycle, what that flow of that seasonal cycle that is just simply so dominant inside the markets that we want to go ahead and pay attention to. This has nothing to do with whether the Dow is going to finish in the green or red today out here. We're taking kind of, I guess, a little bit bigger picture out here. Here back inside the New York Stock Exchange, I guess I didn't get there, but we were going to take a look at the advanced decline line itself, which is here at the bottom of my screen, which had gotten to a level 387,120. That was a new all-time high just a few days ago, January 18th. Today's the 20th out here. So the advanced decline data, the advanced decline line, is doing fabulously out here. There's just simply no problem. Now, look, the New York Stock Exchange yesterday, okay, this is where we're talking about this is just take a look at the difference between the last 19 and 39 days of this data out here did dip below zero. This does tell us that just like the Dow had been underneath that, in this case here, this is the red line out here, had been below it since the 28th of December, that the New York Stock Exchange, unless it gets back above zero today, probably not going to, that it is sellers that are in control here. But still no damage is being done. No significant price damage is being done out here. Short term, I can make a case. I can make more of a case that the market should decline between now and January 30th. I don't know if I have been clear on that, but I want to make sure that I am clear on that. What I'm also clear on is I don't see any significant moves to the downside. The normal type patterns that are out there, whether it's in the NDX 100, like John and I took a look at, whether it's in the New York Stock Exchange, whether it's in the Dow, they just simply aren't out there. Whatever happens in the next couple hours happens in the next couple hours. You know that I'll be willing to change that tune, name that tune when it actually shows up on our screen right now. But right now we have to go with the data. Okay, so enough of that. We did have a request that came in, it seems like 2 hours ago, to take a look at wheat. And my apology for not getting to you on that, but let's take a look at WEAT is the ticker symbol out here. And the question, I think, was, where do I see it going? Here's the problem with this ETF. 1/3 of wheat is in the is in the April contract. 1/3 is in the December contract, and 1/3 of it is in the July contract. So in order to really identify where the ETF is going, you've got to go evaluate those three futures contracts for wheat out here. What I can provide to you are the current market profiles if they will populate. And this says that if this gets below 720, price will run down to about 704. So, folks, it is a fabulous Friday, Inauguration Friday. Stay tuned. Our favorite polar bear, David White, is up next. Have a fabulous weekend. We'll see you on magnificent, marvelous Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.